Welcome to this explainer. Okay, today we are tackling some source material that completely fundamentally challenges how most of us think about building wealth. Most of us are conditioned to think about our money in days or weeks or maybe months if we're lucky. But there is a massive shift in how the truly wealthy perceive time. If you want to escape that exhausting trap of just surviving day to day and start actually building something real, like a financial empire, it requires a complete timeline reset. So get ready, because we're going to break down exactly how you can adopt the secret timeline of the wealthy.
Okay, let's dive right into this. Checking your portfolio daily, it's completely toxic. It just gives you a flat line. Even if you check it monthly or yearly, it barely registers a bump. But look at what happens when you stretch that timeline out to a full decade. Boom, you get this massive, vertical explosion in growth. The material we're looking at today makes this absolutely crystal clear. Focusing on the short term actually kills your long-term gains. Real wealth, the kind that literally changes your family's future, requires a 10-year timeline.
All right, Section 1, the short-term trap and reacting to the noise.
We live in this incredibly fast-paced, totally anxiety-inducing culture where everyone is pressured to get rich right now. To really understand this trap, we have to look at two completely different mindsets. On one hand, we've got the get-rich-quick mentality. This is often born from that survival-driven everyday hustle. It focuses on single days, it's highly reactive to the news cycle, and it's constantly chasing quick trends. But on the flip side, we have the wealthy investor marathon. This mindset focuses entirely on decades. It's incredibly patient, highly automated, and because of the magic of compounding, it treats wealth building as, well, mathematically inevitable. The sources emphasize that fast wealth usually vanishes just as quickly. Sustainable wealth, that's built slowly.
When you fall into that amateur mindset, you enter this deeply toxic cycle. It's like you start checking your portfolio every single day. And when you do that, you inevitably see red, right? Which leads to total panic during normal market drops. So you sell at a loss. And then what happens? You try to chase some quick meme stock trend just to make up for it. The sources are super blunt about this. This reactive behavior actively destroys your financial foundation. It's just a constant anxiety-driven cycle of buying high and selling low.
Moving on to Section 2, deleting market noise and the decade's advantage. We really need to look at how the wealthy completely remove this anxiety from their lives. So the absolutely crucial point here is this. A long-term perspective deletes the noise of market drops and temporary panics. Just let that sink in for a second. When your horizon is 10 years out, you honestly stop caring about what the Federal Reserve is doing on a random Tuesday or what some tech CEO tweeted on a Thursday. You establish this incredibly calm, authoritative mindset that is completely bulletproof against short-term panic. And when you visualize it, this calm mindset makes perfect sense. I mean, one day of market noise is totally chaotic. The one-year trend, right in the middle, still wildly unstable. But when you zoom out a full decade, all that unpredictable noise completely flattens out. That daily chaos just transforms into this steady, reliable, and really high growth. Time is literally your absolute biggest advantage here. Section 3, drops are just sales. And the secret perspective. Now that we've zoomed out, this brilliantly illustrates the huge divide between the amateur and the professional. To an amateur, a market crash is a terrifying loss that requires immediate panic selling. But to a professional, a wealthy investor, a market crash is just a temporary, really cheap sale on high-value assets. It's the exact same event, but the reaction is completely opposite. It's this fascinating cognitive flip. The wealthy are planning decades ahead, so when the market drops, they don't see their life savings evaporating. No, they see a massive discount. They know the 10-year trajectory goes up, so they treat market drops exactly like a Black Friday clearance sale on their favorite assets. They don't run out of the store screaming, they grab a cart and buy more. Treating drops like discounted shopping isn't just some quirky habit. According to the sources, it is a fundamental insider strategy for building immense wealth.
Okay, Section 4, the 10-year rule and taking action.
All right, so we understand the mindset, but how do we actually do this in real life? The sources give us a very clear 3-step action plan to break that survival cycle. Step 1, stop checking the daily price. Seriously, delete the apps off your home screen right now if you have to. Step 2, set up automated investment systems. Make the money move into your investments before you can even think about touching it. And step 3, adopt a 10-year timeline for every single investment you make. Basically, if you aren't willing to hold an asset for 10 years, you shouldn't hold it for 10 minutes. Period. Let's move to this next point and see how this builds. Because step 2, automation, is absolutely vital.
Let's be real. Human willpower is a super limited resource. We get tired, we get emotional, we panic, and we forget things. The sources tell us that budgeting and investing based purely on willpower will eventually fail you. But automated systems, they just run constantly in the background. They're completely emotionless, highly consistent, and they absolutely ignore the daily news. To execute a true 10-year plan, you simply cannot rely on yourself. You have to rely on your systems.
Which brings us to Section 5, Mathematically Inevitable Wealth and the Payoff. And that brings us to the ultimate payoff here, the number 10, a single decade. Now, this isn't just an arbitrary number picked out of thin air. 10 years is the rough threshold where the absolute magic of compound interest really starts to show its leverage. The sources explain that wealth growth starts out deceptively slow, but over a decade, those steady returns start earning their own returns, and the balance begins to just explode vertically. 10 years is exactly what transforms a tiny, boring daily habit into an actual financial empire. Now, what's really interesting about this, and honestly the most profound takeaway from the sources, is this idea. With time as your advantage, wealth growth becomes mathematically inevitable. This is the greatest secret of all. Real wealth building isn't about getting lucky. It's for sure not about grinding harder or somehow outsmarting Wall Street day traders. It is just a formula. It's boring, slow consistency combined with uninterrupted time. It is pure mathematical certainty.
So, what does this all mean for you? I want to leave you with this really provocative final thought. What will your portfolio look like exactly 10 years from today? I challenge you. Stop checking tomorrow's price. Stop stressing over all that daily noise. Start actively visualizing the mathematically inevitable wealth you are building a decade from now. Set up your systems, embrace the long game, and just let time do the heavy lifting for you. Thank you so much for joining me for this explainer. Now, go start your decade.